Welcome back, dear traders. Here is a red-hot review of US markets. Curiously, Wall Street managed to close yesterday's rough session on an optimistic note. The benchmark stock indexes closed with the modest gains ahead of the two-day policy meeting of the Fed Reserve. The Dow Jones rose 0.64% yesterday. The Nasdaq grew 0.76% and the S&P 500 gained 0.69%, but failed to settle above the landmark level of 3,900 points. It closed at 3,899. The New York pre-market was gloomy today. Wall Street indexes traded in the red, like in the pre-market yesterday. The S&P 500 is expected to trade in the intraday corridor between 3,790 and 3,940 points. Most of the 11 sectors in the S&P 500 closed in the green on a Monday. The healthcare stocks were the exception. The sector shed 0.6% due to a fall in the Moderna shares on the next day after President Joe Biden said in the interview that the pandemic was over. Shares of industrial companies jumped 1.4% following a steep drop on a Friday. The banking sector added 1.9%. Shares of high-tech giants such as Apple and Tesla surged 2.5% and 1.9% respectively, thus propping up the rally in the S&P 500 and the Nasdaq. Despite modest gains on a Monday, global investors share the risk-off mood. Institutional investors are selling stocks at the fastest pace in the last 12 months, S&P Global Market Intelligence reported on Monday. The focal point this week is the Fed's policy meeting. Investors are in the wait-and-see mood until the central bank unveils its policy decision. They are also alert to the Fed's revised forecast and comments by Fed's policymakers. With this information, investors will try to puzzle out when the regulator will halt the cycle of rate hikes. Investors are looking forward to the Fed's forecast of unemployment, inflation, and economic growth. After significant gains yesterday, stocks of top US companies such as Apple, Tesla, Microsoft, Amazon, and Meta printed losses in the New York pre-market. Ford Motors shares slumped to 4.8% in the pre-market after the car manufacturer stated that suppliers' expenses would expand by $1 billion in the fourth quarter because of a soaring inflation. Besides, the company's car inventories will be 40 or 45,000 cars due to the shortage of spare parts. In turn, this will derail car sales. The US dollar is trading quietly at a multi-year highs in anticipation of the key event. Today, its index has grown 0.35% to trade at 110.11. The intraday corridor for the index is seen between 109.70 and 110.40. The US currency remains the outright winner. It has been hovering at about the highest level in 2 decades against the basket of major currencies. Despite a minor retreat on a Monday, the outlook for the greenback is clearly bullish. Meanwhile, the euro has slipped 0.5% to 0.9975 against the US dollar. The pound sterling dropped 0.24% to 1.1406 versus the greenback, having rebounded from the 37-year low, and the greenback gained 0.29% against the yen to 143.68. As for the economic calendar, market participants got to know mixed data on the US housing market. Today, the US reported on its building permits, which shed light on future trends in the construction sector. Building permits contracted 10% to 1.517 million on a year in August, such lower than the consensus of 1.61 million. This drop has been the sharpest since April 2020. Building permits fell to the lowest level since June 2020. At the same time, housing starts in the United States unexpectedly increased 12.2% on months to 1.575 million units on a year, beyond market expectations for 1.445 million units. And this has been the biggest growth since March last year, though the data for the previous months was downgraded. Housing starts contracted 10.9% in July. Despite some recovery in August, the US housing sector is still weighed down by rapid inflation in prices of building materials and rising mortgage rates. The loonie looks aligned today, and the Canadian dollar is giving in to its firm American rival, and the USD CAD pay is trading lower today at about 1.3334, the weakest level since October 2020. The intraday corridor for the pair is seen between 1.3290 and 1.3380. Apart from the hawkish Fed and the strong US dollar, the loonie is braced by Canada's macroeconomic data. Lower than expected inflation data is the expectations for the rapid pace of further rate hikes by the Bank of Canada. The annual rate on consumer inflation in Canada slipped to 7% in August, following a 7.6% spike in the previous months. The CPI is below the consensus of 7.3%. Hence, inflationary pressure has been ebbing away in Canada for a second month in a row. Consumer prices declined 0.3% on months, which is the first drop since December 2021 and the sharpest one since the pandemic outbreak in April 2020. Such inflation data could assure the Bank of Canada to increase interest rates at a slower pace. Oil prices skidded again today. Brent crude sank 1% to trade at $90 per barrel. And the cryptocurrencies are losing ground today. Most top coins are trading steadily amid the caution smooth ahead of the Fed's policy meeting. Bitcoin tumbled below $19,000, having lost almost 3.45%, the second largest token in terms of market capitalization. Ethereum shed 1.2% to trade at $1,346. Other altcoins such as Solana, Ripple, and Litecoin are also trading in the red today. The outlook for Bitcoin remains the same. The token could again test $18,200 or go down, aiming to retest $17,600. The most realistic scenario is a trading in the range between $18,400 and $19,600. Keep close tabs on the financial markets on InstaForex TV channel. Make profits with the InstaForex and see you online tomorrow.